without any further ado, we'll come to the star of today's show, Ken Race, who's from Chan and Naylor, a firm that specifically looks at the property sector in a lot of detail. So terrific to have Ken along from Chan and Naylor. And Ken, I know this is a busy time of year for you guys, as it is with many professional services firms in the run up to June 30, and I guess there's lots of investors and astute buyers who you'll be dealing with at the moment.
Yes, how are you, James? How are you, listeners? Yes, as you said, June is a very busy time of the year, people preparing for tax, of course, and people preparing themselves for the new year and people closing the prior year. So it's all fun, and it's certainly a very interesting time for our property investors.
Absolutely. Ken, we'll jump into the tips. We've got a bit of ground to cover today, and I guess it's good as we start to make. I know you want to make the point that property investors need to look at their property investment portfolio really as a business and approach it with that level of seriousness.
Correct. I mean, we have a lot of clients who are property investors, specialising in property around Australia. The successful ones certainly are the ones who treat property investing as a business. They buy the right property in the cycle, they use the correct strategies, so they look at structures, asset protection, the finance, tax, and just as importantly, they look at making money on their properties outside of normal market-driven forces. So that could include renovations, of course. So it's taking part of the, if you like, the results in their own hands and not relying solely on the market conditions, which can be influenced by many, many factors, as we know.
Absolutely.